Hello, everyone. Good afternoon at this critical hour after lunch. You're very brave to be here with us today, and I hope that the discussion we're going to have about real estate sector will bring a lot of interesting insights into this important topic. Maybe just a quick show of hands. How many of you actually own or invest into a apartment or house? Just to see how many people with stake in the debate actually have. Yeah, it's quite a lot. And thank you, gentlemen. And I think that this is a good start because about 90% of the houses that we own will be still standing in 2015, but only 75% of them actually have energy efficiency standard that's equal to Paris climate goals. So there's a lot we have to do in rebuilding and getting the sector ready for the big challenges that are upcoming. It's not only about energy efficiency, obviously in the residential, but also in the public sector, and it's also not only about energy efficiency, but also about thinking about the social impact and the social situation in the sector. Affordable housing is becoming quite an issue, especially now in the times of inflation, increasing prices. There are housing crises in a number of cities already stemming up, and the potential to impact on carbon emissions is apparently huge. I will add a few numbers that I think I saw in an article by Petr Svetman that about more than a third of the buildings, about a third of the waste actually comes from the buildings, and 50% of all extracted materials are also basically condensed in the construction sector. So this is a huge challenge for the climate change solutions. I'm happy to have a wide array of guests here today. It's six guests, so I hope that we will get enough time for all of you to join the debate, as well as the people in the audience. And also we have the Slido here ready for the questions of everyone who is watching us online. So let me quickly introduce. I'll start probably with the lady at my left, Madeline Schneider, managing consultant at Guidehouse. Also worked with the Partnership for Carbon Accounting Financials. We have Raúl García Rodriguez, a friend from Spain, who is however running the sustainability services at Deloitte for the Czech Republic and Slovakia. I welcome Petra Hajna, sustainability officer at the CPI Property Group. It's a pleasure to have you here. And Lukáš Kovanda, well-known economist and economic commentator, worked a number of financial institutions and currently is chief economist at Trinity Bank.
Good afternoon.
Welcome here on the podium. And now I turn to our guest who kindly joined us online. And it's Peter Svetman, CEO at Climate Strategy and Partners, formerly managing director also at Climate Change Capital and vice president at JP Morgan. So we're very pleased to have you even a bit earlier than you were supposed to join, Peter. Thank you for that. And last but not least, Tamáš Kašinský, Director of Sustainability Consulting at Deloitte as well, but this time at the Central European level. So welcome, Tamáš, also here with us at this discussion. So let me start the first round. We'll try to provide space for all of you with one general question, which basically is giving you the opportunity to approach the topic from the perspective you have. Some of you are more of a technical nature, some of you are more dealing with finance, some have practical experience with green bonds and a lot of other restructuring and reporting in your particular companies. So what have been the main stumbling blocks, basically from your perspective, for decarbonization of the real estate sector? what are the main issues from your perspective? I've mentioned just a few, but each of you are representing a specific view or angle of the problem. So let me maybe start with Ms. Petra Hajná, the most concrete example probably of a real estate investor group. If I'm not mistaken, that over 16% of the total assets of CPI Group is already in green bonds. Correct me if the number is wrong, so that's a pretty high number. You are reporting according to several standards. We have been dealing with the hassle of so many different reporting standards yesterday at a very interesting discussion. So what do you see as the key stumbling block basically in your endeavors to decarbonize real estate?
Thank you very much. It's a pleasure to be here, and also thank you for the question. Petra, you know, we met in the past and we discussed this topic, and from the real perspective, I would like to share our experience actually with the reporting as well as with the financing. And you know, I would like just with starting and saying something general, that if there is a will, there is a way. And I guess, you know, in this area, it's definitely applicable. So when I thought about, you know, having the burdens could be also transferred into the opportunities. So for the opportunities, you know, we can talk about financing. And the financing, you have just mentioned, you know, we issued 4 green bonds in 2019 and 2020. In January this year, we issued sustainability-linked bonds as a first real estate company in the region. And these sustainability-linked bonds of 700 million euros with the annual coupon of 1.75% is, I guess, a great example which tells maybe more than a very long story here. So even the financing could be linked to the sustainability and to all this area, and this is all the conference we are here for now. So I guess this is definitely something possible at the market, you know, with these kinds of financial instruments. Then I was thinking about some like capacity or corporate structures. But if you look into sustainability, I see it, and for the future definitely, it will become an integral part of the business. So it won't be something extra like we now distinguish between financial and non-financial reporting, but it will be just one reporting, and we will put everything together, and there will be a financial part and non-financial part, of course. So I really see if we incorporate it into the business, then there won't be any obstacles in the future, and I guess this is the way. And then about technology, I would say from my perspective and from my experience, you know, having the diversified portfolio, having many buildings which are in the stock for many years, the average age of our buildings is around 38 years. So we are not someone who owns only brand new buildings full of new technologies. So I guess this is definitely something we need to look into and find the ways. But again, here I would say that, you know, if you have economic sound and environmental sound solutions in the building, and we as a long-term owner could, you know, see that the payback period is actually shorter than the lifespan of that solution, of that technology, it definitely pays off. And the current times, you know, with the energy prices, the payback period is even shorter. So I would say all of these areas which we will talk about that today, of course there are burdens, you know, of course you need to, it's not business as usual, definitely not, but there is always a way, you know, how to tackle all these solutions.
Thank you. I think that your case is definitely inspiration. Raul, you forgive me that I was giving the word first to a lady. I'm sure you're expert on the financing aspects, and now you also been following the situation on the Spanish real estate market about the affordable housing. I mean, the very big question is basically who will pay for all of the retrofitting, refurbishing, or new technologies that we need in the construction sector. So this is my side question. But of course, you're free to comment on any perspective you like.
Well, I'm coming from Spain, but as you know, I've developed my career in Central and Eastern Europe. So I have the two perspectives, because I was working for a Spanish developer for 15 years. And actually, when it comes to any kind of retrofit or new technologies as such needed for decarbonization or energy efficiency or resource efficiency, it comes down to the very basics of the business itself, which is a cash flow. If it fits into the cash flow and you are able to identify where will be the break-even point for you, is this a cost or is it an investment? Something that you have to agree with the CFO, with the project managers, to understand what should be done and to what extent we can afford this on our own with our cash, or we have to ask for some debt to come into it, or some stretch coming from maybe EU funds or green bonds. And there is a way of doing this, as you were saying, when there is a will, there is a way. But looking at how to finance this, you first need to see how do you put this into your cash flow. If it makes sense for the cash flow of the project, it will make sense for the balance sheet of the company, and then it will make sense for all the creditors, investors, the capital that will help you build everything. So that's it. And in order to make that, the best way to approach it is to approach the data. You have to measure. You can only measure with good data, and data is a blocker here. There's not enough data, or the data that is there might not have been formulated in a standardized way. You have to create and to make sure that there is governance on the data, that you understand within the projects and within the companies who owns the data and how to formulate that data so that there is produced in a way that everybody can read it, that it can be transferred across those cash flow feasibilities, balance sheet, and then to the users and to your investors. And without the data, we're nowhere. There's no way to measure, there's no way to improve. So the two things go together. How to put it into the cash flow, how to analyze it, and to make the data available.
Is the situation improving in your experience in terms of capabilities of data collection in the sector?
Yes.
Also in this part of the world?
I think the data it's not just for one part of the world, it's everywhere, and it's improving. There's a lot more vendors, there's a lot more companies already working on data. Perhaps they're working now on data that is more, let's say, with a stronger impact, coming from source industries, or in construction as well. There is a lot of data on cement and materials, but there is a long way to go still. There is a long way to go.
Mm-hmm. Okay, thank you. I'm sure I will come back to that.
Thank you.
I just realized that I introduced myself. I've taken care to introduce every one of you. So my name is Petr Laveda. I'm director of Glopolis, NGO partner to ISFC, and we have been dealing with the issue just for one year. But it's a great pleasure to be here and help with this conference. So just a short inlet so that we're complete. And now I would like to turn to Lukáš Kovanda. Your perspective has been a lot from the macroeconomic view, basically. So if you see all these developments around real estate sector, we have now cooling down of the mortgages, and investments are a bit slowing down. Do you basically support also the view that there is enough finance, basically, ready and going into the sector, into this kind of challenge that we're talking about?
Thank you for that question. Good afternoon, ladies and gentlemen. Thank you for inviting me to this panel. To your question, I think currently we have to see the inflation, the rapid inflation in our country and globally as an opportunity to really go ahead with greening and with green transition of our real estate, because even in our bank, Trinity Bank, my bank is a small Czech bank, but we have seen currently many customers wanting us to finance, to help them finance, for example, solar panels or some retrofitting that would really fulfill the recent modern criteria of how a building should be built or should look because of all the all the aims, objectives of carbon neutrality of 2050. So I think that current inflation is not just a problem, macroeconomic problem, which is not only economic but especially social problem. But on the other hand, I see it as an opportunity because of with higher prices of gas, for example, or other fossil fuels, not just gas but coal, electricity, power as such. There is a growing need on the part of households, but also on part of companies, businesses, really to push forward with investments into greener buildings and greener retrofitting. So I think in this regard we are changing a course right now quite dramatically, because until the crisis I think Czech Republic was kind of laggard compared to other countries, because, for example, 4 years ago, many people, many of our clients still thought that all this criteria, it's kind of bullying or something, it's not necessary. Look, fossil fuels are so cheap and so on, so for us it's not advantageous to go green. But now the atmosphere is completely different, and they see a potential not just in the greener planet, but in economic elements of it. So I think with the time coming, I think it will be even more and more pronounced, this phenomenon and this approach. And because of that, I'm quite optimistic for the future years, because I see an abrupt change in the behavior of Czech citizens and Czech companies.
I think this is crucial, obviously, the way the market moves. But do you also see it followed by the public policy framework?
To some extent, yes, but you are right that there is some room for improvement. Certainly.
Speaking diplomatically.
In the Czech Republic, I'm a banker, so I have to be diplomatic. And of course, still, inflation is, as I have said, it's a big social problem, not just economic, but especially social problem. For many households, it will be really a difficult period right now. But I think officials, politicians should make clear that with long-term perspective, those green solutions are even cheaper than staying with fossil fuels, especially when there are, for example, carbon emissions permits that are going more expensive and so on. So we need careful economic analysis. And we need a careful approach of politicians to the general public, and I do not see it yet. I see that very often the opposite is true, that some politicians still aim to somehow discredit the goals and to get very cheap political points by discrediting all the goals we have had for carbon neutrality. But again, I think with the development in economic field, with prices of fossil fuels going up in the future, I think for the politicians criticizing the goals, it will be more and more difficult to stay with their current position.
And to ignore the developments and people and in the markets.
So to some extent, current crisis economic, I think is, maybe it will sound cynical, but it's good for the aims or for the goals of carbon neutrality.
Okay, thank you. That brings a lot more other questions. For instance, how can we in the ESG link more cleverly maybe the E with S to prevent the housing crisis from developing? But I would like now to turn to Tamáš Kaczynski and maybe ask him, because he has probably the best overview of the whole region, so that we don't talk just about Czech Republic. If you see any major differences between the countries in the regions, and what, in your view, basically are the most promising technological solutions that this region should be thinking of?
And maybe, if you allow me, at first I will refer to the stumbling blocks, because I was thinking just to refer also to what was said before. We've been talking about this lack of data, what Raul says, and agree totally. In my opinion, the most important thing is conscious understanding on the strategic and translating also this into operational level of the impact on the business, that we need to deliver 50% reduction in CO2 emission in a decade. This is and not a risk. This is reality which is coming, and moreover, it will be distributed not equally in all segments of real estate. So this is the issue that we need to take that into consideration, that this is already a fact. Expectation on 50% reduction, and the stumbling blocks and the problems that we have, probably not only in the CEE region, but more generally, is the uncertainty still on expectation of the growth of the market. Which clients and in what tempo they will expect to transform to the green and zero emission. And the question, will the market be eager to pay more for that extra greening, or they will participate in the market for renewable energy investment, or this will be a new standard. So green will be cost, and market will expect that green will be within already the solution. And also the issue is we need to remember that decarbonization of buildings energy is the fastest and cheapest way to deliver science-based target decarbonization goals for corporations. So for sure, in the corporate sector, we'll have very big push for greening, and probably the price constraint will be there. Another things connected with that of the stumbling block, it's a uncertainty on energy prices, because whether we should go to the PPA or open market for energy and green energy certificates. Another thing is that when we are talking about uncertainties, probably we are not ready, because majority of companies didn't do risk analysis as TCFD guides us to do. And then when we will do this analysis finally, we will be ready to define the strategy. And in my opinion, we are not there as a market. Of course, there are leaders that already have analyzed risk opportunities and that define the strategy, but most of companies are still on its way to analyze potential impact in short, medium, and long term. And then, of course, translate that into decarbonization activities or at the end. If I maybe I will later refer to the to the Central Europe specific issues, if you allow me.
Yes, sure. I'm sure we'll have another round. So thank you, Tamáš, for outlining the basic stumbling blocks, really, for the discussion. We certainly will come back to some of them later. I would now probably ask Peter Sweatman what his view, which might be slightly different, because Peter is basically looking at the issue not only from the European but also from the UK perspectives, where some of the innovations have already been happening, also in terms of affordable housing. What do you see as the most strategic challenges for the sector if you want to stay still on the sector level as a whole?
Well, Peter, thank you for the question. I feel a bit like a judge on the Eurovision Song Contest coming to Prague in this way. I would love to have been there with you in person, and I wanted to thank particularly Linda and the team at the International Sustainable Finance Center for inviting me, for having me as an advisor to the center, and also for this fantastic event. In answer to your question, I think the main barrier is the people who need the money don't have access to it. So that's a simple thing to say. Let me explain it. So the European Green Deal and the European Renovation Wave needs around €1 trillion invested into buildings in the next 8 years. So when I'm asked where's the money coming from and where does it need to go to, I quickly say, well, it's buildings we're investing in, and buildings in Europe, residential ones, are worth 17 trillion euros, according to a survey by Savills. The amount of mortgage debt or total debt that's borrowed against those buildings is 7 trillion euros. So that leaves a value of 10, so 17 minus 7 is 10. So that leaves 10 trillion euros worth of value in residential buildings against which we can borrow. So the 1 trillion is give or take a 10% of the equity value in buildings. So when we start to think at that scale, we start to understand how 35 million buildings will be renovated in 8 years, and we start to realize that the role of mortgage lenders and lenders in general is absolutely necessary to make sure that everybody gets a chance to borrow this money against their existing property to improve it. Now, why would they do that? So I think we need to see that properties that are more energy efficient are more valuable. So the first reason that they would do it is to protect the value of their property. The second reason they would do it, of course, is that over time, and I mean the longest time, the energy savings they will be making through these investments will pay back some or all of the borrowing. So increased value, energy savings, and then an improved existence or livability, comfort, and other matters which an energy renovation and a renovation bring to the property. So that's an improved life experience. So to me, the thing that's missing and the thing I'm calling for and that we've been speaking in the context of the Repower EU plan is something called an EU renovation loan. And the EU renovation loan would be a government-backed instrument that was distributed by lenders to all buildings owners in a fair way and a way that can be borrowed against the existing equity they have in their buildings. And that this would be an instrument that was 30 years of maturity or the sooner of when you sell the building. So obviously this is attached to the building. And that it would have a zero coupon structure. So in answer to what Raoul from Deloitte said on this panel, we need to look at the cash flows. One of the benefits of a zero coupon instrument is that you don't pay the interest until the end. So that means that these questions about will I make money, will I see a positive cash flow result, the answer to that question will always be yes from day one. Any energy savings that are made will automatically flow to the bottom line of the family and the household in that building. So the improvements, the benefits, and the cash savings will happen immediately. And then the repayment will happen at the far end, when the realization of the value increase has also happened. And if supported by governments, a renovation loan of this description could be set at an interest rate that would mean that it looks attractive as a form of borrowing. And the reasons why governments, I think, would be attracted to do that is because providing support in this way costs so much less than providing direct grants and is so much easier to distribute and is a great way of blending public and private sources. So again, that's my sort of silver bullet, even though silver bullets, as we know, are not the only answer to this question, but that's the one that I think is least well understood and possibly open for discussion of this panel. Thanks.
Thanks a lot, Peter. I was asking about challenges, and I got a perfect solution to the situation. I think that's really well thought through with a lot of aspects. The question comes to my mind: what actually still remains to be done so that we can see such a policy measure being adopted. But let's finish the round and maybe move to the second thoughts on that. Madeline, you have also quite some experience with the policy framework. So, what from your perspective is the key challenge? And can you actually imagine that solution that Peter just described on the EU level is realistic within, let's say, a few year span?
Yeah, thanks so much, first of all, to be here. Very great to discuss this urgent need to decarbonize the building sector today. And a lot of key issues have already been raised, so I try to add a few more to that. And would like to answer the question from the financial sector perspective based on the insights from the PCAF signatories, so the participating financial institutions of the Partnership for Carbon Accounting Financials. So, I think we all agree that massive investments are needed, as Peter also just highlighted, and correspondingly the financial institutions play a key role there. But to take on this role, what we see is that financial institutions need to understand how to decarbonize, actually, what steps they need to take to decarbonize the building portfolios, and also at what speed and how to leverage finance in the right direction. And that's actually where we see that clear guidance is lacking at the moment. So financial institutions, in our discussions with them, they come to us and say they actually lack the clear guidance how to decarbonize their portfolios. And it's true that more and more financial institutions are committing to net zero and are joining relevant initiatives, but actually just a few specify concrete actions how to decarbonize their portfolios and develop financial products and services that accompany also this decarbonization. So, and this also already starts actually with terminologies and definitions. So we have been approached by financial institutions that tell us they need guidance what a net zero building is and what the requirements are, because they lack guidance on that. So there is a lot of terminology out there. There are different definitions, zero emissions, zero energy, climate neutral, climate positive buildings, and so on. But many, so the definitions lack alignment and the terminologies, and so on that guidance is required, and that's why we are currently also looking into existing terminologies to align them, to harmonize them, to guide financial institutions what net zero buildings are, because in order to decarbonize, of course, you have to know what the buildings are that need to be financed. So that's one key point. Another key point is data, what you already raised. So due to the fragmented nature of the building sector in Europe, especially the different EPC implementations across European countries, or the different building type classifications and so on, this results in scattered data across European countries. And this also hinders the measurement of emissions in the building portfolios, which is actually a key step to move towards net zero, because first of all, you need to know where you're currently standing, how many emissions your portfolio accounts for, and based on that you can take next steps. But there really the data situation is scattered, so that's also where we at PCAF try to support financial institutions. So we recently launched in February a PCAF European Building Emission Factor Database, which provides emission factors to enable financial institutions to estimate the emissions of their commercial real estate and mortgage portfolios, so as a first step in the net zero journey. And just last point, overall, we see a lack of alignment and also lack of shared understanding of data quality and data needs among key institutions that are working in this field regarding the greenhouse gas emission assessment, for instance, regarding the life cycle assessment, including embodied and operational carbon, which data is needed. So here really alignment is key among key institutions to align data and approaches to give clear guidance to key actors that are able to speed up the decarbonization of portfolios. Yeah, and maybe last point, because you were asking regarding policy mechanisms. So just what you were saying before, adding to that, last week I was at the launch of the Green Finance Alliance in Austria. That's an initiative of the Ministry of Climate Change. And it actually to this initiative, financial institutions voluntarily commit to align with the Paris targets. And when they commit to that, they mandatorily have to achieve certain targets to move towards net zero. So that's one of the first, I believe, initiatives in this regard from the policy side that kind of want to motivate financial institutions to move towards net zero. And so far, 9 financial institutions have committed to that in Austria. So maybe it's also interesting to replicate.
Mm-hmm. Thank you. Definitely, we've been talking diplomatically about the role of government, so we have some examples of positive movement. Thank you, Madeleine. We're about in half of the debate, so I think this is also room for you as well as for our guests online to quickly react to each other if you feel like commenting on what was said by somebody else. In the panel?
Maybe if I can start, I can just confirm that the data, data is really needed for everything. And from the daily business, I can say that, collecting the data and working with the data is really key. And, if you cannot measure, you cannot improve that. So this is really important. And from the day life, in the business, in the real estate business, I guess this is the biggest challenge, when it comes to reporting. Then if you do not have the real data, it's very difficult. You work with the estimates, and then, all the process, all the methodology could be in place and could be just wonderful. But if you don't have the right data for that, it's very difficult to present anything. So very good you raised, and Madeleine, the data, yeah.
Okay, Peter was raising his hand also, please. The floor is yours.
Thanks, Peter. I wanted to come on this field of data because so I'm the rapporteur for the European Energy Efficiency Financial Institutions Group, over 400 financial institutions who actually met at a plenary meeting this month in Brussels. And one of the working groups there is working precisely on this area of data. And I think financial institutions across Europe are all quite frustrated, as you've heard from my colleagues on the panel here, about the availability of data from particularly buildings, because there's so many different types in so many different countries. However, one of the positive things that was presented to us during that meeting, and we're now is sort of entering, is an examination of what artificial intelligence and machine learning have been able to achieve over the last 3 years of being applied against the buildings challenge. And it's very interesting because German financial institutions are now subscribing to machine learning data, which can provide a 3-dimensional architectural model of every building in Germany, 90 million buildings to be precise. And those models are 85% accurate with respect of a detailed forecast of the energy needs of the building. So it's my personal view that the data question that you've heard expounded will, in a few years, just disappear. Because we will be sophisticated enough to be able to use the 12 to 13 public sources of information, satellite data, Google Maps, etc., to be able to approximate to the needs that are required to identify the low-hanging fruit for buildings renovation. Because in the end, There is a simple question: do you have insulation in the attic? Yes or no. Do you have a cavity wall? Yes or no. What is the lighting system that you're using, etc., etc. What's the fuel source for the heating of your block, etc. So there are some very simple questions that, when combined with the modern techniques that I've seen now in action and can testify to this audience, are quite mind-blowing in terms of the way of their sophistication. I think this discussion for financial institutions worried about the climate and the transition risks in their mortgage portfolios will be substantially resolved very quickly. Even in Spain, Raul, there is an organization called Sociedad de Tasación that's working with Spanish banks on exactly this issue. And we heard them speak in this plenary meeting. And so I really think that one of the pieces of good news I wanted to bring to this audience is that the physical buildings science and the trajectories of the specific properties, I think, will be very, very easy to know, very cheap to know, and this new source of information using proxy data and using estimates will be a new generation, will generate a new sort of generation of opportunities to pick up the lowest hanging fruit. Because, of course, I'm not referring to needing to know with precision to the lowest euro the exact expenditure of a particular building on April the 24th. But what I am describing is a way that financial institutions can identify the buildings which have are most apt for an upgrade, and then to be able to work with them to be able to produce those benefits, both in terms of greening their own mortgage and providing all the benefits of renovation to their own customers.
Thank you, Peter. You are full of inspirational ideas moving us forward. I will take the opportunity of Raul being addressed already. Does that provide a solution to the data problem we were discussing in your view?
Definitely. The only worry that I see here for everybody is that within some time, it might mean a lot of time for what we need to do. And we need to start acting anyway. We may have the data, which is good, it's coming. We know we analyze data all the time when we work in sustainability projects. This is the first thing that we tell all the clients, all the companies. You need to understand who you are. Before we give you any diagnosis, we have to do the analysis, and we have to make sure that we do a good analysis so that we can go inside and do everything, understand everything. And we formulate the diagnosis in a language, in a narrative that is standardized, so that when the machine learning, when the AI comes into place, they can identify that data. Because this is actually how it works in the industry. The rating agencies, the rankings, are looking into data that they're not asking you for. They're looking into publicly available data, and if it is not well formulated, it doesn't matter whether it is there. You may be the best, but it's not done, or it's not expressed in the way that it has to be. So this is one of the burdens that we see. Now, provided that everything is there in the way that it has to be, then you have to, again, implement this. You have to put it in the loan, and I think the solution is great. I had something here that is exactly the same of what you were saying. So thank you for saying it. I'm not going to say it anymore. But it's true that there is a moment there that somebody has to foot the bill. How do you foot the bill? Do you foot the bill yourself with fresh equity? You take money out of it, and then what is that? What does that bring back to you? I mean, this is potentially a solution for some companies, not for all the companies, and especially not for companies when we talk about affordable housing, because in affordable housing, what you see is that the return on investment is smaller, much smaller. And when we talk about infrastructure, how do we do that? Because there's a lot of public infrastructure that has to be paid by somebody. There's already existing public infrastructure that is leaking out energy. It's not well isolated, it's a lot of retrofit. Who's going to pay for that? So in order to bring public together with private capital, you have to come with these innovative finance solutions. It's not that innovative, but it's some sustainable finance solutions that can put together in the same cash flow, in the same feasibility study, the two elements. And I think the key there is the guarantee. Who will guarantee the investor that there is going to be a return? And there has to be a political guarantee so that things will not change. All the legal framework is not going to change overnight, so that the rules of the game are different. And we have seen this in some places. But then you also have to give them the bankable guarantees. And probably this is the role of the politicians. the role of the public to make sure that there is maybe these EU loans, maybe NGOs, maybe IGOs, multilateral development banks, somebody there who can help with this mezzanine finance. Somebody was talking yesterday about mezzanine finance, which is very important. Yes, it is important because otherwise private investors will not come into the game. If they have to foot the bill from the very first moment, without having the guarantees and without knowing when are they going to get the licenses, without knowing when are they going to be operating the objects, then they're not going to work. Because nobody is going to come into it. You cannot oblige somebody to invest just because you think it's good. So you have to help them on that. So that's, again, where the data comes together with the finance, and it's the only way forward. Now, for private investors to be involved, you have to create the business case. And the business case is there. Somebody was mentioning there's two sides to this. One of them is improvement in the performance. Of course, that also brings the second one, which is that you will spend less. You spend less in your taxes because, of course, you pay for your emissions, and you pay for every other kilowatt that you use more than what you should, or a liter of water that you use more than what you should. Nobody wants to spend more resources. You want to spend less, but you have to do the retrofit. So that's how the whole thing comes together for the business themselves. And we have to help them understand where they are in the correct way, so that also the market understands that.
That brings us again to the discussion on the policy support, basically, for this. So maybe another question, if we can still keep in the diplomatic mode, for Lukáš, if he see this kind of private-public partnership, or at least dialogue on basically how to help guaranteeing the bills, the biggest expenses evolving somehow, and whether also the amount of European funding, which there is a great a lot in pipeline, will we be able to effectively use it also to basically fix the leaks in the public infrastructure and the public buildings? Sorry, two questions at once. Just keeps coming to my mind. You can choose just one if it's too much.
Thank you for that question. Focusing on the situation in the Czech Republic, I think it's very important to know that EU Recovery Fund that was started after the pandemic or during the pandemic has had two major pillars here in the Czech Republic. First is digital transition, and second, green transition. So I think that we should allocate a part of the funds from the green transition amount to, as it was said, to guarantees, for example, because I agree that without government, without public actors showing the way, it will be very difficult for market participants to really go into that process. And with government guarantees, I think it will be much easier to take necessary risks that are related to the issue of greening and retrofitting buildings and making them greener. And focusing on new Czech government, I think certainly this is its main goal, or one of its main goals, of course. Currently, of course, the priorities are a bit different because of the war in Ukraine and because of rapid inflation and some measures to make it easier for people to overcome this period, which is quite difficult. But in the longer term, I think green transition is certainly a major goal of not just this government, but the governments that will come after this one particular. And we need at this time clear commitment by all political actors, not just the one currently in the government, but from opposition parties, that once there is a change in government or of government, the major direction will still stay same, because it's very important for market players to have this elementary certainty that nothing important would change. Some minor changes, of course, with new governments are to be expected, but nothing major, like to abolish it all or redirect it all or something. It will be very bad sign for market players, because we as a bank, we are market players. We need certainty. We need some politicians who are able to make us sure that really this basic direction won't change with possible change in government structure and government representation. So this is what's most important on my side, from my point of view, and I guess some politicians already understand this, and some others not, but we need to convince them that this is really the most important thing.
Yeah, I guess we all need to keep pushing from all the sectors. That's for sure. If you allow me, I would now turn back to Tamás, a little bit discuss the regional differences that we escaped before. There's been ideas for different technological or market innovations. Also, there's probably a different degree of the debate between the private and public sector, let alone some collaboration. Can you see some other major differences between the countries in the region, and who shall we actually look to as a kind of more closer inspiration, let's say the quite advanced UK market?
Yeah, so thank you for that. And really, there is a difference in Western Europe and Central and Eastern Europe when we take that approach, because Central and Eastern Europe, as always, is a bit delayed in a strategic and operational thinking to the new things. Taking approach, we'll wait and see what solutions will be developed. And then it could be a situation that, due to the already established mindset of Western investors and financial institutions and asset managers, there will be need for very rapid growth of this transition in a strategic thinking of the Central and Eastern Europe companies and institutions. And we will have very big headache when we will come to the bank and bank will say, okay, do you have your decarbonization climate covenants for scope 1 and 2 to get the finance for this project? And then if you don't have it, just I think that in that situation we should not use the approach wait and see, but to be in this discussion from the very beginning as it is happening. Another issue for the Central and Eastern Europe, especially for our region, is potentially shortage and constraints on green energy supply. It can appear that renewable energy sources capacity, as well as market preparation for PPAs, for green long-term contracts, it's limited. It's not enough for expectations of the market, and it may appear that frontiers will take it all, especially they will take green energy on an acceptable price, and all the others who will be laggard, that is what mentioned, they will be in worse situation, because the price for green energy for them will be not competitive towards the market. And the last thing, which is probably very much also important to our region, is really constrained with potential central heating decarbonization, because central heating decarbonization will be driven by public domain, and real estate owners or investors will have little impact on the tempo of that decarbonization. So that would I would say these are the three main perspectives from my point of view, because in my work I'm dealing mostly with strategic and operational thinking towards decarbonization. Thank you.
Thank you, Tamás. Maybe one of the promising initiatives was already mentioned by Madeleine with her experience in the Partnership for Carbon Accounting Financials. Could you identify maybe what are the factors in your view that actually make the other actors think a little bit more strategic, as Tamar said, or a little more long-term? As Kai said, what is the kind of mindset triggers or mindset change triggers that you, in your experience, have seen happening that perhaps we can be hoping also be replicated in the region?
Yeah. Maybe briefly at the beginning, it's helpful if I give briefly the context of PCAF in case not everyone is aware. So it's, as you just said, brief for a partnership for carbon accounting financials, and it's an industry-led partnership by financial institutions, free to join for financial institutions, created in 2015 by Dutch banks in the Netherlands and moved globally in 2019. So the core of PCAF is to standardize the measurement of emissions of loan and investment portfolios. So that's also where it helps financial institutions to start a net zero journey, to be able to measure the emissions, and then, as you said, to take then longer term decisions. So one of the key milestones was the launch of the corresponding PCAF global standard on accounting and reporting of financed emissions in 2020. So it currently includes 6 asset classes, such as commercial real estate and mortgages. And currently it's extended to include even further asset classes such as green bonds and sovereign bonds. And the extension will be soon launched, so you can stay tuned for that. And overall the network currently includes more than 250 financial institutions worldwide, which shows that there is really the need for such a voluntary initiative to standardize emission estimation, not only in building portfolios, but across portfolios. And this was actually a target set for the year end, but now it was already reached 1 month ago. So it really shows that there is a need for this currently. And it covers financial institutions from all over a wide range, banks, asset owners, insurance companies, and helps them to measure and track the emissions of the portfolio. And the largest region is actually in Europe. So most PCAF signatories are based in Europe, and this is also why we use this growth and this momentum to start mobilizing financial institutions in Europe to decarbonize their building portfolios, to raise awareness on that, because as we mentioned before, all of these different characteristics, the aged building stock, these are really key factors why there is, especially in Europe, need to decarbonize building portfolios. And this brings me briefly also to the project I'm managing, the PCAF project Financing Towards Net Zero Buildings, where we aim to mobilize financial institutions across Europe to take action to decarbonize the building portfolios and to speed up in that way the building transition. So we support them on the whole, on all steps of the net zero journey, from measuring and disclosing emissions towards taking actions. In this way, we're producing supportive, the key tools that they need. So on data, what we said before, we just launched this database with more than 20,000 emission factors for all the EU countries, and plus UK, Switzerland and Norway, where based, depending on the data availability of the financial institution, you can select by building type, by EPC label, and based on this you are able to extract the corresponding emission or energy intensity, and this helps you know, depending which data you have, anyways, you can estimate calculate the emissions, and the better your data quality gets, you can of course specify them. So this is kind of the first step that we see as a prerequisite to start a net zero journey to decarbonize portfolios. And then as just another example, we're launching in June a guidance document where we want to give financial institutions recommendations how to speed up the building transition, and actually at what speed and at what effort level the decarbonization of their portfolios needs to happen, and also how to make the transition actionable, so what financial products are required and also what technical measures. So just as an example of the products that we're currently producing based on the demand that the PCAF signatories bring in. So.
And maybe in your experience now, if I come back to the question on the mindset, how you actually go about trying to broaden the mindset of the financial institutions and other actors which are involved, would you have some few tips? What is that actually helps people think a little bit longer term?
I mean, what we see is what always helps are front-runner institutions, so financial institutions that already take the steps towards net zero, that are already more advanced, and actually kind of peer-to-peer learning, knowledge exchange. That's what we see is most helpful, because that actually really helps financial institutions that just start the journey to adapt and to exchange, to see what is possible. In some European regions, can it be adapted to my region? And that's also kind of where we help to facilitate the knowledge exchange and to spread good best practice examples, also of financial products, where there are really some front-runner institutions already, and that are willing to share their experiences and also their stumbling blocks, so others can learn from that.
Excellent. Let me take this as a reason to ask Petra, because you are basically a pioneer in the sphere of decarbonization and greening of buildings, not just in the Czech Republic but also in the country, because you're also present in Germany and other markets. Do you feel that you can actually be the kind of peer from whom the others may learn, and are there some kind of mechanisms that you've been devising to help share the knowledge and experience with others in the market?
Definitely, I guess this is the solution, if you know how to, tackle this problem, how you set your strategy, how you measure your greenhouse gases. If you then share this experience, you can support the others, and you can also explain. We started with the ESG journey, in 2018. So we do not have many years track record or decades of track record of in the sustainability field. So you can see that you can really move forward very quickly if you would like to. If you have some bold and visionary management, they support you in this work. At the same time, you incorporate it into the business, then I think it's a definitely win-win solution for everybody. And we as a company, as a CPI Property Group, really try to, get this message across, and, also being here today, and sharing the experience could be an example of that. And we are trying to explain where we started, when we started in 2018 with the measurement and with the ESG strategy, it was not definitely perfect. We were, calculating scope 1, scope 2, we have just a little bit of scope 3. However, this year, 2020, reporting 2021, we can say that all categories in scope 3 are now covered. So it's again about the development. You are moving somewhere. And what Madeline, said, I can just refer to that we, regarding data, something was said that, we struggle to get all the real data from all our buildings. Our portfolio is very wide, and diversified, about 400 buildings, so it's not something really tiny in different countries. But the thing is also, for example, if you would like to know the emission factors from our suppliers here in the Czech Republic, it's an issue and a nightmare, I must say. So, having some kind of database here could help you, but at the same time, if you are trying to get the market-based data, the real data, we really need some help, and maybe if there is a structure behind that, saying that it's mandatory for the suppliers to actually disclose this data, for those who report that, it would be very helpful.
I think that's the next level, because the scope 3 is said to be the holy grail, basically 3 times as many emissions probably. So maybe let me ask, I think that also Peter has mentioned that in some of his articles. Peter, could you maybe add some more examples of really successful retrofitting or other initiatives that you have seen in your project or research around Europe?
Of course. The state renovation program of the Czech Republic is one that's used a lot. So when we have presentations in Brussels, government representatives note that for over a decade in the Czech Republic, you've been recycling the revenues that the government gains from the sale of carbon credits to buildings renovation. Very successfully, the multifamily apartment sector of the Czech Republic has been renovated, and we see often sort of large maps of all of the Czech Republic, noting how many sort of the individual buildings have been upgraded, and of course these buildings often need structural repairs as well as just energy efficiency matters. And in fact, the Czech, so a number of people say our region is different. It is different. You're doing a good job. So Czech Republic, Slovakia, Romania, Bulgaria, all have state-backed programs that are dealing with buildings renovation. However, of course, we all know that all programs in all countries are too slow. So when I say too slow, I mean too slow for the delivery of the energy and climate targets that we need for 2030 and the necessity to secure our own energy secure future. So that, of course, means that because we have to reduce the amount of fossil fuel products that we're buying from abroad across all of Europe, we need energy efficiency to go faster. And we need to make sure that all buildings who have a future that can use less energy, less fuel oil, less coal, less gas, and that can be converted, like Poland is doing, to heat pumps, which are much more efficient devices in terms of delivery of heat from electricity and connected to the renewable energies, both on-site and grid scale, need to be sort of ramped up dramatically. I understand the challenges now across the region are really in single family homes. And those single family homes are obviously more disparate, and we need new mechanisms like the one that I've mentioned that address specifically homeowners. There's one way that I think banks, private banks like Trinity, like other banks in the region can help here, and that is something called a mortgage portfolio standard. So a mortgage portfolio standard is a tool that's being developed by the leading banks, some of the leading EFIG members already using it, the British government already suggesting it as a voluntary mechanism in the UK. And what it means is mortgage lenders look at their whole portfolio. They attach some data, be that energy performance certificates, real data, some form of proxy data. So the largest lender in Finland came up with a model that basically allowed it to attach what it believed was correct energy performance data to its entire mortgage portfolio, run analysis to basically project that portfolio into the future and see which of those buildings needed to be renovated when in order to comply with a Paris-aligned a TCFD sort of aligned transition portfolio to ensure that the financial institution wasn't left standing with stranded assets due to regulatory changes like minimum energy performance standards and others that I see coming from the Fit for 55 package across Europe, and also that provide an incentive to have the conversations with those homeowners that are necessary. So one of the leading banks, leading mortgage lenders across Europe, ING Bank, said that just by extending each conversation that they had with a mortgage client by an additional 15 minutes, they were able to explain the benefits of an energy renovation to that client, given the knowledge that they had through the mortgage relationship of the financial circumstance and the building circumstance. And through those conversations, they were able to engage and promote a mutually beneficent dialogue in which the homeowners were able to access funds to renovate, and the bank was able to improve the energy performance of the underlying loans to their mortgage portfolio. So that's definitely one area that I see complementing the already successful drive by some of the governments in your region. Thanks.
Thank you, Peter. There's been again some concrete inspiration in innovative thinking, and in fact, you've also responded to some of the questions. So I remind also the audience here in the room as well as online that it's possible to send in the questions you want to ask. I have two that go actually in this direction, and the question is asking about the possible role of private commercial banks and equity. So we just heard that just 15 minutes more of consultations with a client can walk quite an extra mile, important in that. Are there any other ideas, proposals for what the private commercial banks and equity funds could be doing to help decarbonization of the sector? It's not an easy question, so I will probably not see a show of hands, but anybody...
We need the bankers in the room to answer that.
Anybody dares to... Yeah, that's a banking question, but okay, yeah.
Maybe I would add here in the Czech Republic we need to put it in broader context, because currently with the interest rates increasing, there is, as we have seen, a huge decline of interest in mortgage lending. So with the inflation situation worsening in the future, I think it will be more and more difficult for quite ordinary people to obtain mortgage, and because of that to push greening via the mortgage lending. So we need to see it in broader context. So we need to reform our energy sector here in the Czech Republic and in other countries in Central and Eastern Europe to dampen the effects of inflation, meaning we need, at least for an interim period, to really have a plan for how to substitute the gas from Russia, from different parts of the world, in a financially feasible manner, be it liquefied gas, or be it some new gas pipelines or high capacity gas pipelines and so on. So we have to see it in a broader context, and once we have this energy sector reform, there will be lower inflation, and there will be a huge increase in mortgage lending because of interest rates would go down in that environment. So I think it's necessary to add, because currently the mortgage sector, at least here in the Czech Republic, is really not in good shape.
That's
Peter,
for sure.
Peter, could I respond to Lukáš? Sorry, it's difficult being a sort of virtual member of the panel, because you can't sort of wave and sort of get seen as easily as you might otherwise. But Lukáš, I'm listening to you. I wanted to make sure that we all are agreed that the only way to deal with inflation and the rising food prices and energy prices that come with a region that doesn't own autochthonous, that means own supplies of fuels in your region, like is the case of Europe and Czech Republic, is to not need them. So whilst in a temporary situation, you need to diversify supplies, which means instead of buying it from one place, you buy it from another. Ideally, and the reason why the Commission talks of the energy efficiency first principle is because ideally you'd like to be in a situation where you didn't need them at all. Of course, it's better to make insulation in your country, employing your workers to install in your home so that they don't need to buy any energy, and build a factory to provide heat pumps domestically, Czech manufactured heat pumps for Czech homes that will attach to renewable energies that's Czech developed and Czech controlled, than diversify your sources of LNG, which is expensive gas. So I think one thing that should be drawn from the current situation is the opportunity that is manifest to take savings and protect them from inflation by investing them in buildings. Because, of course, as a banker and a chief economist, you know, Lukasz, that if you want to save your savings from inflation, you take them out of the bank and you invest it in real assets. Real assets would be the insulation that gets put into the property in the building that you live in, as a way of making sure that you are protected as a family against what's coming. So I think that these are elements of the macroeconomical case for a stronger drive by countries in the region to deliver energy efficiency at this particular point in time.
Yeah, thank you, Peter, for complementing the thought. I can see Tomáš raising his hand, so I will...
Yeah, I would like to add... I would like to add to your question what private banks and equity managers, what they can do, private equity. As it was mentioned, we already have, maybe they are not perfect, but we already have methodologies. Mentioned today was science-based target and PACTA methodologies. And we know that in Central and Eastern Europe region, not so many companies like banks and private equity companies, they joined this initiative, science-based target. And if they join, they will have to make, of course, approximation and define a convergence pathway to the buildings decarbonization, but they will start the journey. And of course, every second year you could look at those numbers and calibrate them to the better understanding of the data you have. But as it was mentioned a few times before, the journey has to start now. We have only 8 years. The decisions has to be made even on uncertainty of the data. We have to approximate and define strategies, and there are already proven methodologies. Once mentioned PACTA and initiative science-based targets. So I think this is the direction for financing institutions and private equities.
Thank you. So I think that eventually we actually got quite an interesting response to the question. So we have about 12-13 minutes remaining. So I will now try to open the floor also for your questions. It's still valid to send questions to Slido, but we have some participants here, and we kept you silent for way too long. So please, if you feel like raising a question or adding a comment, I'm sure that we have some mobile microphones somewhere around that can be used. Yes.
Hello, I'm Răzvan from Romania, from Mazars. I wanted to ask you, how we can balance, the short-term measures against medium to long-term, because there are a lot of actions we can take. We know them. Many of them are medium to long-term, but on short-term, we might be facing some, some situation which we could not foresee, which a couple of years ago, a couple of months ago. But we need to adapt kind of fast. What measures can we have? And more exact, there are a lot of people, retail people, many other people who know they are concerned about what happens to them on a short term, not on a medium to long term. How can we drive this in a good direction to to mitigate also what potentially is coming and all the sustainability and that we want to achieve? I think it's for all of you who wants to take it.
So again, a question up for grabs.
I can tell you that I think there is no waiting. Whether we like it or not, there is no waiting. You cannot expect somebody to come up with something. You have to act. You have to start getting all your data. You have to start getting all your financial modeling inside and use it. Because you may be out of business if you don't do this, or you may be out of capital to do this, or you may be out of clients to do this. So even as Thomas was saying, even if there is certain or not certain data, you have to act. This is the call for action is right here. We have a very clear timeline. The implementation may not be perfect today, may not be perfect the next few months, but it will improve very fast. We're seeing a lot of capacity coming into the markets, a lot of capacity from every actor within the industry, not only the financial houses, also developers and investors are moving very fast. Standards are getting aligned. So even within the time of the exercise, to be able to create your own strategy, you will be having enough data or enough knowledge to bridge to the longer term. We really do have to act now.
Okay, Peter was also raising his hand, so please, Peter.
Yeah, I just wanted to say, as Raul said, we've got no time or energy to waste. The thing you would be surprised to learn is how many small and medium-sized enterprises did not do an energy audit and did not invest in the lowest hanging fruit of energy savings, because it has not been a priority for them. So whilst since September, we've had this spike in energy prices, and of course that is a call to action, what we haven't seen yet is financial institutions take note of the links between energy waste and credit performance. A wonderful study was created by a working group of the EFIG group and published a few weeks ago that shows conclusively that better energy performing properties as collateral reduce credit risk in an absolute sense. So that means following that line of logic, if you lend against or your companies own buildings that are more sustainable and energy efficient, they are less likely to default, they are less likely to be in arrears. That is a fundamental piece of understanding which, when translated into a market regulatory sense, should provide the opportunity for green assets to benefit from better regulatory treatment and more aligned with the EU Green Deal. So I guess what that says to the immediacy of today is energy waste needs to stop, and if you need money to stop it, then financial institutions have a role and indeed an opportunity to provide that immediately.
Thank you, yes. Maybe Tamás first, and then I will also provide floor to you. Tamás, please go ahead. I was just going to also ask you a question. What prevents us to have this understanding in the region, especially among the small, medium companies? Just Peter explained.
I will try to refer to this question, because the question was, if there is such a big uncertainty, how to start the journey. And it was already mentioned by Peter and by some other people here on the panel, that then you don't need a very long-term strategy. Start from low-hanging fruits, as was stated, and every move towards good direction makes your position better. And you can start from renovation, you can start for not losing or waste energy, as it was mentioned by Peter, and also science-based target. You could consider joining that, because you can have short timeline objectives, not 2030. You can have 5-year objectives. So, and then after a few years, you will recapitulate your objectives and make them more specific. So you can start from low-hanging fruits. That was my answer.
That might be one of the responses also, how to get to the long-term thinking, is just maybe not think that long-term, but actually start right now, provide yourself with a shorter horizon and start doing and reaping the low-hanging fruits. Lukáši, you were also going to add some thoughts?
Just a quick remark. There are two major impacts of current situation in the short term, as I understand the question. And the first is, of course, that there is an incentive for ordinary households, companies to pick the low-hanging fruits in even faster pace than before. And second is the negative impact of higher energy prices, higher inflation, And this may lead many of the households and businesses really to be afraid of what's coming, of the change even in energy sphere. So I think we need really an assurement or some reform, quick reform of energy sector on the EU level very fast to make sure that there is no astronomical increase of energy prices across, in the case, for example, that gas from Russia will be stopped by the Kremlin. And so this is really very important, because part of Green Deal, at least for a transitory period, was usage of Russian gas as a way how to move forward, how to embrace green technologies. But in the meantime, we relied on this gas from Russia, which is now very uncertain. And so we need somehow to reform our interim period, the interim period or transitory period of the Green Deal to make sure that this won't happen, because then we could face very, very difficult social problems and social obstacles that may hinder all the Green Deal process in a very significant way.
Which brings us back to the policy framework and what basically the financial institutions and investors need from the government. Obviously, it's energy security policy, it's a good energy mix, and energy policy is going to be reviewed in this country very soon.
Yeah, government policy, one thing. But look, when they are growing opposition, that would be criticizing government, that prices are too high, that something must be done with that. So it will be more and more difficult for the government to really push forward the Green Deal agenda.
Yeah, and some kind of more strategic consensus across the political spectrum, which is in short supply, I mean, over the past decade. But so that we don't end up on this very systemic level, because there was most of the time we've talked about the systemic problems with data gathering and analysis, with strategic decision making. We've discussed the possible government support and obstacles between private and public partnerships, also how to mobilize the consumers and the owners of the houses to engage, including the most vulnerable actors like small and medium-sized enterprises. And it's been very rich debate that I'm sure that everyone took away something from, but I would like to end with a very personal note. If each of you could try to formulate a very personal recommendations for everyone as home owners or investors into some kind of real estate, what in one sentence is that you would like people to take away from this discussion as a closing round? Can we start with Madeleine?
Yeah, I think what we actually just said, start acting now, because the building sector is very static and it needs time to transform. So we can't wait until 2040 to decarbonize, but have to act now to meet already the targets for 2030. And it's a big challenge, but it's doable.
Urgency? Definitely, okay. Thank you.
I would say communicate. I think communication among best in class, the best practices, to create awareness of what works so that the rest can follow up.
Inspiration, communication.
I would say, consider sustainability and ESG as an internal part of business of your life. Nothing extra, it's here, and we cannot say it does not exist any longer.
So basically integrate.
Exactly.
Integrate
Be
the
it
thinking.
as an integral part.
Okay, thank you.
I very much agree with the notion of collecting of low-hanging fruit. So we can start, anybody of us, with just ourselves, with our households, our companies, and thinking in the terms of ESG to take it internally, and I think that's the best way how to start the process. And of course, then are other things here like government help, government supports on the Czech level, EU level, and so on. But the first thing is to start and to collect low-hanging fruits, anybody of us.
So focus more on the immediate and the most achievable, maybe at the current moment, especially in times of uncertainty. Thank you. Tomáš?
Yeah, so because there is no plan, or maybe there's no planet B, so then commit to Paris Agreement and engage all important stakeholders to define the targets, and also for the financial institution, rather use portfolio alignment method for the Paris Agreement rather than changing portfolio exposure, not to pose stranded assets. Thank you.
Okay, so maybe go public about your commitment to make the pressure maybe a bit stronger and motivate you to move forward. Thank you. And Peters, you've been such an inspiration to this panel, so I hope you still have something in the pocket for the last word.
Well, let's see. Nul point. No. The thing I mean, anybody who owns a building, and if that building is not EPC A class today, you will have to renovate it in the next 30 years. So given that you do have to renovate it, and that renovation will happen by force eventually, so given that that force is now apparent in EU directives, just take this opportunity to look at it, look at the pathway, imagine it in a net zero future, imagine it with the solar panels it needs, or the insulation it needs, or the LEDs that it needs, or the new windows that you would love to have, and do that now.
Excellent. So it was more than three even recommendations. Thank you a lot, Peter, Tamás, Lukáš, Petra, Raul, and Madeline for taking part at this panel. Thank you all for watching us and for sending in the questions. And I hope that this will move the decarbonization of the building sector one step closer to the Paris goals. So thank you a lot and have a good afternoon.
Thank you.
Yeah.